Alright guys, I think I've lost my mind, and if you get through to the end of this video, I think you lose yours as well. So we have big news from Capitol Hill, and I think we all knew this was coming. The United States has reached a deal to lift the debt ceiling once again. And this is very big because lifting the debt limit is both great news and terrible news at the same time. According to McCarthy, we have come to an agreement in principle that is worthy of the American people. Now, we don't have the exact details yet, whether there'll be spending cuts or if it's just smoke and mirrors. No one knows just yet. But I want to take the time to share some perspective about what lifting the debt ceiling really means and why it is both good and horrific at the same time. And here are the cliff notes that we know so far. Number one, the debt limit will be suspended until January 2025. And this means the US government can pay their bills until the start of 2025. So interest payments on US Treasuries will continue. And the good news is the US bond market will not implode and there won't be a dollar shortage for the world. There's no major currency crisis coming just yet. But I want us to focus on the second part of this paragraph. Non-defense discretionary spending would be kept at the current year levels in 2024 and increased by only 1% in 2025. And this is very crucial, and not many people realize what this means. The US government is still going to be borrowing like before, and there's room to increase non-defense discretionary spending by 1% in 2025. But let's focus on the word non-defense. That means the US could continue to ramp up defense spending. Spending in the defense industry could very well skyrocket, and this means billions more money being poured into Ukraine. So that part of the budget will continue to grow without any limit. In fact, there isn't any true restraint on spending, guys. According to Reuters, the deal is expected to boost defense spending to almost $900 billion. That's an 11% increase from the previous allocation of $800 billion. So sit back and realize that the US debt isn't going to come down. It's still going to balloon up. We'll hit another debt ceiling disaster in 2025. And I don't know about you, but this is simply kicking the can down the road. If you think things have changed, they fundamentally haven't. But let's talk about the bond market and what this means for US Treasuries. Because now the debt limit's gone, the US Treasury can move to issue more government bonds. They can start to borrow more money to start paying off all the obligations. And this means bondholders will be made whole, interest payments will continue, and the US Treasury market is stable for the time being, right? Stable. And this is supremely important because now the market sees the Treasury market as more credible because the US government didn't default. Now, I want us to make a real distinction here. Raising the debt ceiling makes the problem worse down the road. But in the short term, investors will gain confidence by parking their money in US government bonds. And if you look at the situation today in the world, this is where money will likely flow to. We have treasuries, especially on the short end, yielding over 6%. The 10-year is also near 4%, which is an attractive yield considering we are likely moving towards a recession. And let's take Germany for example, guys. The country is officially in recession, and the rest of the Eurozone is also looking very unstable. And what does this mean? Investors will likely pull out of the EU markets and run to dollars. And because now the US bond market is stable, money will flow into it. I need to pull up this chart again because it is just so important. The US Treasury market is over $25 trillion strong. It is the biggest bond market in the world, larger than Japan, China, and the UK all combined. It's like a supermarket for cash. They have a ton of bonds to sell to customers, and this means they can absorb a ton of money from investors looking to park their cash. And whether we like it or not, this is the reality we are operating in until the dollarization picks up further. Now, this isn't good news for the economy, especially the banking sector, because the US isn't going to default yet. US Treasuries are now a credible place for investors to chase return. Let this sink in. So don't be surprised if more money starts to leave the banking system. It travels and it floods into US bonds because at least with the debt default risk, depositors could keep their money in the bank and then they get the FDIC guarantee, right? If you keep up to $250,000 in the bank, the US government will make you whole. Even if they need to print up all the money, they will still make you whole. But now things are different. The US government won't default. So US Treasuries are starting to look like the best place on planet Earth. So just imagine the huge incentive there is from bank depositors now. Why do you want to suffer 1% interest in a bank when I can get 5 to 6% in bonds, and I know the US government won't default? They will just kick the can down the road further. Pulling up a story from Reuters, why a US debt deal may only provide short-term relief for markets. Now, markets might be celebrating now, guys, but there's a big aftershock that's coming. The tsunami is coming. Listen to this. According to JP Morgan, the raising of the debt ceiling is expected to be followed by the issuing of $1.1 trillion in new treasury bills. This is extremely important because they will be financed at higher interest rates. That's a crazy 4 to 6% yield. I think we can see the magnitude of this move. This is serious business. And let's quantify the potential damage that can happen. A strategist from BNP Paribas estimates that up to 800 billion could leave cash-like instruments such as bank deposits. The money will leave the banks and move into treasury bills. And what does this sound like? It sure sounds like another bank run to me. So now we have another liquidity squeeze on our hands. The banks might lose so much cash on hand, they could just freeze credit loans. They might jack up interest rates to the point that no one dares to borrow money. And that's why the worst likely isn't over yet. Remember that the Federal Reserve isn't going to cut rates anytime soon because inflation is still so high. Germany is in recession, and now you have a boatload of treasuries at higher rates being released into the markets. Guys, Janet Yellen is going to unleash the Kraken, and it could thrash around, destroy everything, and take down even more banks. But I want us to project this out further. Let's zoom out 5-10 years from now, because I can almost guarantee that by 2025, the US government will raise the debt ceiling once again. And by that time, rates could crash all the way back down to zero. Especially if the economy implodes, we might be back at ZERP, zero interest rate policy. And let's recall the most famous chart in finance today, and that is the Federal Reserve's balance sheet. Every time there's a crisis, the Fed always defaults to easy monetary policy. We can see that every time we enter recession, the Federal Reserve runs to the inflation Bible. They lower rates and they ramp up their balance sheet by buying more bonds. It happened back in 2008, it happened in 2020, so it won't be surprising if it happens again soon. And to be honest, it doesn't matter what stunt or trick they pull. Maybe they decide to do QE and print a ton of money to buy bonds. Maybe they lower rates, or they could also start throwing stimulus checks to the man on the street, right? They make it rain money, and it all leads to higher inflation. At the end of the day, raising the debt ceiling is inflationary. We are heading to the inflation roach motel. You can check in, but you can't check out. And let's remember the lyrics on a dark desert highway. Inflation is blowing through my hair. Warm smell of money printing rising through the air. And we need to understand this. This means the money printing will get bigger, it'll get bolder when the next debt crisis comes. I'm really losing my mind here. I have no idea when that might be, but it's coming. Maybe it's 2025, maybe it's 2030, but lower rates are coming for us. Alright, guys, I gotta calm down. So if a recession comes, which I believe it will, it's time to buy when stuff is at a discount. Now you can do what you want, but I'm piling into stocks, I'm piling into gold and other hard assets when the crash comes. Now the US government has shown their hand by raising the debt ceiling. They have made three things abundantly clear. One, they are kicking the can down the road again because the consequences of a default are unthinkable. Secondly, if the end of the road comes, they will just inflate the debt away by getting the Federal Reserve to be the buyer of last resort. And lastly, they will defend the reserve status of the dollar, even if that means sacrificing it on the altar of inflation. The dollar index might continue to rise, but make no mistake, guys, purchasing power is going to keep crashing down. Alright, guys, I gotta end this here. I'm really losing my mind. I can't stand this. This clown world economy is merely making me go insane. This is Twilight Zone economics. But let me know what you think. Will they raise the ceiling again in 2025? And more importantly, will this trigger another banking crisis? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.